Hello, everyone. Happy Opex Friday. How is everyone doing today? Good morning, Sterling. Good morning, Patrick. Hello, Bull Strike Cheetah. Good morning, Mark. What else do we have? Thank you for putting in the earnings. Nothing really major with earnings. Good morning, John. Good morning, Royal Palms. Remind me, Royal Palms on AMD. Good morning, Heinrich. Good morning, Martinez. Good morning, Jacob. Good morning, Ted. So, again, we'll wait for some people to come in here. Viewership's picking up a little bit again. All right. So, remember, most important, OpX Friday. OpX Friday. My least favorite day of every month. My least favorite trading day of every month. Because the price action can be a bit unpredictable, but still based off yesterday where we got the dip into the rotation zone and then the dip got bought up, still expecting upward price pressure because it's still buying the dip. And also keep in mind coming up, we have the S&P Manufacturing Services and Composite 15 minutes after the cash opens, but more importantly, we have the final February consumer expectations and inflation expectations. Pay attention when the number comes out at 10 a.m. Eastern, because if either of these beat by even a tenth, the market will probably celebrate. If they miss again, if they come up and higher than these, the markets could react negatively. But again, it's OPEX is going to rule the roost today. OPEX, Fed speakers have been a little more hawkish from my perspective, and we still have Daly and Jefferson speaking today. So that's what's going on right now. Hello, Charles. Good morning, Andrea. So do not stick your head in the sand at 10 a.m. Eastern. Pretty much big news today. UNH down, United Healthcare down 12% based off of Department of Justice pending probe into what it was at Medicaid billing or Medicare. I forget which one, Medicaid and Medicare, but that's getting hit pretty hard. Everything else is pretty much up for the majors. Everything else is pretty much up for the majors after yesterday's brief, quick sell-off. Consumer cyclical. So I watched the rotation zone. Learn to watch that. Learn to watch for dips into there, and then reversal patterns. Consumer cyclical leading stuff. Healthcare led by UNH, taking it in the shorts. Energy and healthcare are the only negative things, and energy is slightly negative. A Fed watch tool still has one cut priced in for July, and then the next cut not till next April. So nothing's really moved there. We're definitely not getting the cut in March and probably not in May at this point. Still in neutral mode. PE ratio still 38.58 in the 38s. In terms of earnings, there was nothing market moving yesterday afternoon. And this morning, Sterling put in some stuff, but nothing that's really going to affect the market. So unless you're holding those stocks, it doesn't really matter because we covered a broad market. Who else do we have? Hello, Charles. Good morning, Tony. Good morning, McRangers. You all get tardy slips. Good morning, Eric. Well, I'm handing out a lot of tardy slips this morning on a Friday. Yeah, Coinbase is up after U.S. Securities regulator drop lawsuit. This is going to end. Crypto's going to end really interesting. Mark my words. There we go. Medicare, there, thank you, Medicare billing practices. All right, so let's zoom in. Yesterday, dip in the rotation zone at that 6105, 6106 level, bouncing off there. You see, it was really interesting yesterday, really interesting. Coming down through the first little price window I talked about, 6131 to 6124, then 6105, bouncing between them, and then slowly building back up. 60.31 becoming support again. Now we're trading against a very key level that I'm watching this morning. 61.42, which is the prior support level before we got yesterday's opening morning sell-off. And this was a momentum-driven sell-off. That's why I'm really watching this breakdown level, which you see we've just recently tested. We get above there. 61.55 is now back to being key for me today. 61.55, if we did move above there, we'd be about 61.63 to 61.65 is my next key area. So resistance 61.42, if that turns into support, I'll start watching 61.55. Remember, not every OPEX day, but they tend to be choppier and more back and forth price action rather than trending. Keep that in mind. If we break back down 61.31, I might narrow this up just a bit to about 61.30, where I'll be watching for some key supports. And then this 61.25 area, which was reinforced yesterday. Again, this is an area, not to the tick. People mistake, oh, well, it went through there by a few ticks. I don't care. I'm watching for price reactions around there. So you see, poke through that level, poke through that level. Again, the 6105 level, 6106 level. We poked through it a couple of times, but look at the base that got built there. And then this coming back up proved to be support, and then it based right there, and then it moved back up. So those are the key levels. Just wanted to review some price action. NASDAQ dipping into the rotation zone also. Coming down to a couple key highs yesterday. Again, right in here. Right in here, spiking down, but look at this. I don't know if anybody noticed this. Nice little double bottom pattern yesterday against those key highs. Nice little double bottom, triggering here, coming up to the first target, coming back down to the trigger point, all right? Then just grinding higher and tacking off the second and the third target right now. So those were the targets I was watching. We just hit that right before the live stream started. So that is done. That is done and dusted. So right now going into the open, if we do have any pullback, I'm looking at this 2172, 2175 area. Minor support we're trading at right now. On any continued rally, my key level is 22,300 today. That's where I'm keying off of resistance. So look at this little dip into here. And the nice little 15-minute, remember, anywhere between these areas, I'm still looking for buy setups because we're with the separating rotation zone. Now, 22,300, if we had it turned into some reason a major trend day, next key level is 22,400 to 22,415. Good morning, David. Let's see, what's this? Andrew did a house closing yesterday for my clients as first-time home buyers, and a home that's similar comp was just listed 2.5% higher, so great deal for my clients, but it's hard seeing this market. Well, that's congratulations for them. Great job, Andrea. Good morning, Anissa. Let's see. Dodge back spending, Department of Education spending skyrocketed 749% despite downsizing, with Department of Education staffing shrank. Its budget exploded with nearly eightfold with little show for it. We're going to really see how this Dodge stuff turns out. I mean, there's savings, but I don't know how much they're going to really be able to squeeze out of this. So overall, S&P, NASDAQ, if you ask me, I'm in choppy to bullish mode today. Dow, because of UNH, remember, Dow's only 30 stocks and UNH is already down. If we look at UNH, by the way, UNH, so remember, way back here in December, we closed below after the CEO, not the main CEO, the CEO of one of the divisions got killed and everything, you sold off. Then it bounced back, but this did nothing. This was just a corrective bounce back pattern, but it already closed below the 62.5, and look where it's opening today, below the 87.5. So this is going to round trip it back to the lows of April. Would not be touching this stock yet. By the way, that's what's pressuring the Dow because it's only 30 stocks, and UNH is huge. So would not be looking to the Dow for the bullish case this morning. Actually going to be watching for some continued pullback in the Dow, and my next major level on any pullback is 43,710. Russell, testing, again, dipping slightly below, but closing back above this 2263 key support level and now reinforcing that it's rallying off of that. Minor on a rally today is 22,298. And still the major resistance is 2330. Is there, besides short-term trading patterns, there's nothing going on longer term to Russell yet. Remember, this potential double bottom will probably get invalidated in the next couple days. VIX, but we still have the double top to play out, which is still completely valid. VIX, nothing to talk about there. DAX, now I'm going to be watching next week for the secondary reaction. We technically, if it rallied majorly and closed above yesterday's high, it'd be a percent beat buy. We could be sitting up for a percent beat buy, though, and a rotation zone buy early next week for the secondary reaction, which is going to tell us a lot. So we'll keep an eye on that next week. Let's just look at the yields. Again, still caught in this range, a little pullback in the yields, which still surprised about the way the yields have been trading based off the Fed speak. But unless this breaks down below 4.4, still got to go to possibly stable to upward rising yields. There's no great pattern right now, though. Dollar index. So the potential double we talked about yesterday, excuse me, is no longer valid. I would still keep a stop in that vicinity for any shorts, especially because reward risk is so good. Don't mind bumping it up a little to about 107 on a closing basis because it's not really going to modify. I hate moving stops, but because the double got invalidated and the rotation zone is just above there, I'd want to make sure before I exited any shorts that it actually closed above the rotation zone and the 50 and this key resistance level. But we still should see some downward pressure. It can still, though, be a channeling double. So that's why this should be managed tightly if you're in anything with the dollar index from my perspective. I'm saying dodge is dodgy. How often do opposite days turn into trend days? I think it's around, it depends on the market, which one, but it's around 12 to 15%. So it's not that often. Now, that's strong trend days. You could have a choppy trend day, but that's not really, where you're getting back and forth price swings with a slightly upward bias. Crude coming up here, and you see what it did right here. Let me show you. Forming a little mini double top right here. Just in front of the next targets. So that would definitely be after hitting the first key level and then forming a double top. You don't front run this, but the pattern's technically not over. I'm just looking at this right now because we're still in a choppy range bound market, and this is completely valid. So triggering the double, the 4-hour double, last 4-hour period, trying a little bounce here, but looking like we're going to retest the bottom of this range, which would invalidate this other potential double bottom. So remember, if you're front running, trying to get into this other pattern, and you have a double top pattern that triggers, I wouldn't be in a front run pattern anymore, personally. Gold, still pausing. Again, still holding the rotation zone. Trying to work off some of these cycle tops, but not doing a great job yet. I'm still watching for more consolidation. This is consolidation. There's no great setup just yet. It's still from the long perspective, from the larger time perspective, still long. In the short term perspective, if you're trying to day trade gold or swing trade it, there's not a great setup from my perspective. Again, everything's from my perspective, not trading advice. Silver still holding the breakout zone, the short-term breakout zone with the rising rotation zone. Still going to watch for some upward pressure on silver. Look at, besides today's pullback in the yields, because inflation's running hot in Japan, but look how this yield's been climbing. Now, yen coming into we ticked off the 87.5 yesterday. I'm going to be watching for a bottom, at least a short-term bottoming pattern in here. This is a very key level. So you have prior, we sliced down through when the big sell-off in August. Remember the bloody August 5th when it put in the bottom and the markets just had the key low? Coming up, making a key resistance level in the middle of August. Making a lower low with a major divergence. Then testing here. Testing right here, turning resistance into support, verifying the support, and now we're back to that key support again. Do we have a major bottoming pattern? We just had a minor double bottom, which is already played out. The minor double bottom's already played out, but I'm watching for a more significant potential bouncing bottom to come off of there. Bouncing bottom. So, Daniel, hello. PEP, potential double bottom. I got to look at AMD. I got to look at PEP. Spiders. Again, on any rollover play would be to yesterday's close. We're trading just below yesterday's. I'm peak yesterday's high. That's what I'm watching. Yesterday's high for the upward bias, 611.68. So that's what I'm watching. A breakout above that is to return to that 613.25 area is the first target. And then going into next week, if on a continued rally, the next major target is 617.50. Qs. The Qs on any rollover would be to yesterday's close, remember. Still favoring choppy to slightly upwards bias. 539.27 is where we're looking open. 539.10. So that's going to be my first level support, yesterday's high. To yesterday's open, which was a 538.73. So that's my support zone on any pullback. But then the target, see the upside, 540.81. And then the next major target is 544.08. Where do we sit? Let me just Bitcoin. Bitcoin closed above my key level yesterday. We had this 98.150 closing just above it. Pulling back there and looking to run up. My very key level now is 101.290 to 101.300 is the next target to the upside. AMD. From a longer term is closing on in a very key support zone. We're against the harmonic. We're against the prior support confirmed resistance. And this is a big resistance. I mean, this is a big support window right in here. You see anywhere in here, I'm going to be watching for more significant bottoming pattern between 109 and 95. That's a wide zone, but this is a weekly chart. If we go down to a daily, you had a little minor double against the rotation zone that's already hit the first target, so it's raising stops. This was a completely valid double against the rotation zone and against the weekly rotation zone, and the top of the weekly rotation zone is within it. So this was a very aggressive. I'm watching for a more significant bottoming pattern in here, which there is not one yet. Okay. Remember, a minor bottoming pattern can turn into a more significant one, but the minor one does not have to call the low. Pepsi definitely has a double bottom on a daily and a weekly time frame. I'd be waiting for the weekly close personally because it's against the weekly rotation zone. Because look, if you get the close above 155.47, by the way, this is a front run on a percent beat buy on a weekly basis. If you're watching Pepsi, a break above last week's high with the follow through with the close was the trade there. So, and you see breaking out of a horizontal channel with the gap left behind. So, that's the first level. That's the first level I'd be watching for once this gap fills, possibly a little pullback reaction right there. Also on Pepsi, the key level for any front run, if you're looking to front run this, I need it above the 50-day, and look where the 62.5 is right with the 50-day. And you had the prior support shelf that was broken, and then you had the gap down. So that's going to be a really key level to regain on any potential front run pattern from my perspective. And then if it follows through, you have the weekly double bottom, which could return it to the 200 week potentially. So there's your Pepsi. Yeah, it's good. That's a very good Spinal Tap lyric. Always a timeless movie. What do you make of FedEx and UPS divergence to the downside in a big way? Well, there's FedEx. FedEx is still holding some very, very key support and rallied off of there. Again, UPS is having trouble based off their contract last year and really breaking down. I mean, it's bounced also, but UPS on any pullbacks, I'd be eyeing FedEx over UPS. Okay, FedEx is still sitting in within the very key support zone. So that's the reason. I mean, fundamentally, from a pair trade perspective, I'd be long FedEx, short UPS. Not at this levels because I'd be waiting for a pullback, but if you're looking to pair trade it, that's the way I'd set up the pair trade, just based off fundamentals. OKLO triggered the daily double top and hit the first and almost the second target. It bounced right after a Yeah, let's see. OKLO. Let's look at your weekly. There's your weekly. And again, that would definitely be an area. Just missing that. I don't think this trade's over. Even though it's hit the first and nearly the second targets. But again, anything into the weekly rotation zone, you got to watch for at least the bounce buy patterns. So be watching for the bounce buys. What's interesting is if it does close above yesterday's high, it is technically a percent beat bounce play only. So keep that in mind from OKLO. What else do we have? So, see, this is why you always have to wait for the closing basis, okay? People overreact. Yes, the key level broke yesterday, but the close is much more important than intraday price action. You see how it dipped below here, but it also closed back above the key level I highlighted in Palantir and closing in the rotation zone again. Remember, it's not a brick wall. You can have price action, but this tells you a lot. This is still getting bought. Now, in order for me to be at all bullish on this, I'm still watching for a next rollover play. But your key targets on any bounce play are 110.60 to 114 before the next potential rollover. And look where the gap's left behind. All right. So that's where that sits. Also, I wanted to point this one out because people, well, intraday it broke. I'm getting shorter. I'm bailing. Look. That's why I stress. There's two kind of stops I use. The walkaway stop, which is a disaster strike stops. That's like if Palantir, let's say you're long and Palantir gapped below, 63, something like disastrous. Yeah, I got a lot of risk there, but if you're in it much lower, fine. But that's where you can walk away from the computer. That's a catastrophe stop. Don't use a catastrophe stop at near-term support because you see here dip below it, and even if this closed below it, it would not panic out of the position. I'd be watching for the secondary reaction to get out on the secondary reaction. People panic out of positions way too long because this dipped below, but how long did it last below that level? Look, this is 15-minute bars. It lasted 15, 30. Let's just go to 1 hour here. How many? One closed below that, and then 3 hours later, it was back above that level. That's not a very long time. Other stuff, Tesla, not much to talk about. NVIDIA, not much to talk about. It's not a lot else. Not a lot else. Let's just peek back in the S&P going into the open. That's still 61.42. I'd be really focused on into the open, and 61.29. Those are my two key bracket areas for the open. Okay? With that, remember, I'll say it again, Opex Friday. Opex Friday. We're getting some pre-market selling, so really pay attention to that 61.29. But I would not kiss away anything until it gets through 61.24 on the opening range. Hope that helps everybody. Uh, Let me know. Could you leave some feedback after this video wraps up at some point today, whether you like the more teaching, whether you like me to review the levels more and how I get to them and some other past things that I see from the prior day. If you like that, or if you just want me to focus on other things, please, I'd like some feedback, and it will help the comments anyways. So I shall talk to everyone later. Bye for now.